I now hand the conference over to Mr. Adish Patil, CFO, Aarti Drugs Limited. Thank you, and over to you, sir.
Thank you. Hello everyone, and a very warm welcome to all of you present on the call to discuss our financial results for the first quarter of financial year 2022. So from Aarti Drugs Limited, today we have our Joint Managing Director, Mr. Harshit Savla, then Whole-Time Director, Director, Mr. Harit Shah, and myself, CFO of the company. We hope all of you and your loved ones are healthy and safe in the wake of ongoing pandemic and floods across the country. The downward trend of COVID-19 cases is certainly a good sign, and we sincerely hope that the pandemic gets over soon. I would also like to highlight that the company has not faced any major disruption in terms of supply chain or plant shutdowns due to ongoing flood situation in Maharashtra. We are happy to share that Aarti Drugs delivered a resilient performance despite facing multiple headwinds during the quarter. Our consolidated revenue stood at rupees 581.6 crores as against rupees 545.9 crores year on year. Revenue mix between domestic and export revenues stood at 69:31%. This time the domestic share was little more than previous year. I will now take you through segment-wise performance. First, we'll discuss standalone business performance. Standalone revenues stood at rupees 505.8 crores, a growth of 6.4% year on year. This contributed approximately 85% to the consolidated revenue. 69% of these revenues came from the domestic market and 31% from the export market. Domestic revenue grew approximately by 12% and export contracted marginally by around 4.1% year on year. However, contraction in exports can be attributed to the fact that around 9 crores of exports from March 20 quarter was accounted in June 20 quarter due to lockdown in last year. So if we take out that base, then export has grown marginally. Approximately 13.2% volume growth was observed in the API segment in the first quarter. Within the API segment, the antibiotic therapeutic category contributed around 43%, anti-protozoal around 13%, anti-inflammatory around 11%, anti-diabetic around 10%, antifungal around 9%, and the rest contributed around 14% to the total standalone revenues. The share of acute therapies remained subdued due to second wave of COVID-19 induced lockdowns. A Tarapur plant, which witnessed a shutdown during Q4 FY21, is now completely functional and operating normally. The company is well on track to mitigate this kind of risk in the future. The company has converted additionally 4 of its manufacturing locations in Tarapur to zero liquid discharge category in current calendar year. Further, the company is in process to achieve ZLD operations for more facilities in Tarapur by the end of financial year 22. This has marginally increased factory overheads, which we plan to overcome in future by making more byproducts from the waste and use high calorific value waste in waste heat recovery boilers. Now we'll discuss about the formulation segment. For the quarter, formulation revenue stood at rupees 86.5 crores, a growth of 6.7% year on year. Approximately 19% of the formulation revenue came from exports during the quarter, which we expect to grow in near future. Sudden increase in the raw material prices. Now we'll talk about business in general, about the API segment as well. Sudden increase in the raw material prices driven by demand supply mismatch, increase in crude oil prices and plant shutdown at the supplier level affected the gross margins. This was coupled with reduced demand for acute therapy products because of the second wave of COVID-19 induced lockdowns. As a result, passing on the increased input to customers However, the average but it was only partial as compared to increased input cost. We believe that the worst is behind us in normal levels in coming couple of quarters. We remain confident of achieving the EBITDA margins in the range of 18% for the current year. Profit after tax for the quarter stood at rupees 48 crores as against 55.5 crores year-on-year. However, we know the June quarter was an exceptional one in terms of margins. The company incurred a capex of around 48 crores during the current quarter and planning a further capex of around 150 to 200 crores.
Sorry to interrupt, Mr. Patil. So this is the conference operator.
Okay.
So we are unable to hear you, sir. Your voice is breaking.
Now is it okay?
No, sir. Let me disconnect your line and call you again. Just give me a minute.
Okay.
Ladies and gentlemen, we have the management line reconnected to the call. Just give me a minute. Thank you, and over to you, sir.
Pardon?
Yes, sir, you're in the main call, sir.
Yeah. I will repeat the last few lines which I was talking about. So, the sudden increase in the raw material prices driven by demand-supply mismatch, increase in crude oil prices and plant shutdowns at the supplier level affected the gross margin. This was coupled with reduced demand for acute therapy products because of the second wave of COVID-19 induced lockdown. As a result, passing on the increased cost to customers was a big challenge in this situation. However, the average realization for most of our products have increased compared to Q4 FY21. But it was only partial as compared to the increased input cost. And that is why our gross margins contracted in this particular quarter. We believe that the worst is behind us in terms of raw material price hike, and EBITDA margins are expected to come back to normal levels in coming couple of quarters. We remain confident of achieving EBITDA margins in the range of around 18% going forward for the current product mix. Profit after tax for the quarter stood at rupees 48.8 crores as against 85.5 crores year-on-year. However, we know that June 20 quarter was an exceptional one in terms of margin, and we had discussed that last year as well. The company incurred a capex of rupees 48 crores during the quarter and planning a capex of 150 to 200 crores for the remaining part of FY22, which might get affected in case there is third COVID-19 wave. The balance sheet continues to remain strong with a comfortable net debt to equity of around 0.54x as of June 30, 2021. The net debt to equity ratio is expected to improve going forward, driven by strong internal accruals in forthcoming quarters. Credit rating agencies like ICRA and CRISIL have reaffirmed the debt credit rating on long-term facilities to AA- with a stable outlook and A1+ for the short-term facilities. The strong credit rating will allow us to further lower our rate of interest, which in turn would reduce our interest outgo, thereby improve our ROE further. I am happy to announce that the share buyback concluded during the quarter witnessed a massive response from the investor and was oversubscribed by almost 111 times. The company bought back 6 lakh shares worth rupees 60 crores during the buyback. With this, the company has distributed around 195 crores, almost 26% of net profit, in the form of dividend and buyback of shares over last 6 years to our shareholders. I would like to highlight here that the promoters also participated in this buyback. The company is well on track of growing the contribution from lifestyle and chronic therapeutic areas and reducing share from acute therapies from the API business segment. Our recently expanded chronic therapy capacities have already started contributing to the growth. We have a robust pipeline of products under development and for both API as well as initial with more focus on antifungal, anti-diabetic, skin treatment and antibiotic therapies. We remain confident of overcoming the near-term challenges. Our growth trajectory is expected to be robust, driven by robust demand, excellent operational execution and capacity expansion through a combination of brownfield and greenfield CapEx in API and formulation segments. Our margins, profitability and return ratios are also expected to improve due to operating leverage and backward integration in coming quarters. The company will continue to explore various opportunities in terms of new therapy addition and geographic expansion. We can now begin the Q&A session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Requesting you to limit 2 questions per participants. Should you have any follow-up questions, please join the question queue. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pranav from Invesco Mutual Fund. Please go ahead.
Hello. Hi. Good afternoon. Hello. Adesh? Hello. Am I audible?
Yes, sir, you're audible. Mr.
Adesh?
Yeah.
Okay. So basically, just wanted to understand, you alluded to the thing that you've taken price increase even the current quarter. But if you've taken price increase, all I'm trying to understand is why is your volume growth then higher than the pricing growth or the value growth if you've taken price increase across segments?
So, I will take you back to the last year. So, June 20 quarter, in that particular quarter, the prices are exceptionally high. I think last year around mid of August the prices had settled down and then just so December quarter and March quarter prices were kind of a benchmark for us. And after that the raw material prices have gone up. So we have taken price hikes with respect to December and March. But this is
sorry to interrupt, Mr. Patil. So this is the conference operator, but your audio is not clear, sir. We are unable to hear you, sir.
There seems to be some problem. Is it okay now?
Yes, sir. You may go ahead. Thank you.
Yeah. So I was saying that, if you compare with June 20 quarter, then the prices have gone down because June 20 quarter at that time the selling prices were exceptionally high. But if you take the normalized quarters of December and March, and with respect to the December and March, the prices have now gone up of the raw material, and so does the selling prices have also gone up. But then the increase in the selling prices is not proportionate to the increase in the input prices, and that is why there is a squeeze in gross contribution.
Okay, so let me sort of highlight. Quarter on quarter, you saw what, 13% volume growth? Is that the right number?
No, that was a year-on-year volume growth.
And quarter on quarter, how this thing have moved actually? Say volume and value.
So value-wise there is growth. In fact, quarter on quarter there is more growth because last time on Concall we had done 502 crores of sale, and this time 581 crores of sale we have done. That is quarter on quarter, March quarter versus June quarter.
Okay, and how much would have been the volume growth like?
That quarter on quarter I don't have the numbers right now, but I have the numbers for YOY.
Okay.
And year on year it is around more than 13%.
Have you taken any inventory write-offs or write-downs in this current quarter?
No. This is purely because of the raw material prices, and almost around more than 22 we have seen hikes in almost more than 22 raw materials. And the hikes were also quite drastic in the sense of, in some cases, more than 250% hike, more than 100% hike like that.
Okay, thank you.
Thank you. The next question is from the line of Ananda Padmanabhan from PGIM Mutual Fund. Please go ahead.
Thanks for taking my question. Am I audible?
Yes, sir.
Yes.
You may go ahead.
Yeah. So, some more color on your raw material price increase. In terms of in the last quarter, you had given a guidance of around 38% kind of gross margins. So, by when would you expect to reach those kind of margins? And in terms of price increases, by Q2, should we expect how are the raw material prices as of now? Have they started stabilizing, or are they continuing to go up?
Yeah. So one thing I would like to answer that in couple of quarters we are expecting that our gross contribution should improve by 4% or so. As far as the current raw material pricing scenario is concerned, I will ask Mr. Harit Bhai to answer that question for you.
Yeah, out of around 20 raw materials, prices are tapering down in almost 50% of the cases. But still 50% of the cases price is still at the same level as of first quarter. But we expect that also to be slowly coming down by another month or so. So we expect in this quarter we expect around 1 or 2% raw material price coming down. Definitely.
And are you continuing to even in current quarter you are continuing to take price hikes in your product to your customers, or how is that working for you?
Yeah.
Or is there any? So is there any for what portion of your business there would be a formula-based mechanism for pass through of raw material prices?
Yeah, what has also happened is due to first quarter due to COVID, the demand scenario was also very bleak. So we were unable to pass on the price increase to the customer due to competition. And also one more point is like in exports, the container rates have gone up by almost 600%, in most of the cases. So there also we are being affected. So in overall situation, we expect we should do better than first quarter, in second quarter. Sure.
And one final question before I get back to the queue. So in Q4, you had mentioned that there was some spillover of sales from Q4 to Q1. So in Q1, what portion of could you quantify that portion for Q1? How much is it? How much of those sales are in Q1?
So it's like last year, we are accounting exports from bill of lading date. So unless that material is shipped, we are not taking it as a sale. And because of that, last year, a lot of March sales, almost from 9 to 10 crore worth of sales, got spilled over in June 20 quarter.
9 to 10 crores.
Yeah. And this year, in fact, the opening inventory of port was lower than the closing in. So this year, actually, we had shown a couple of crores of sale less in exports because of the same BL accounting.
Okay. Thank you. Thank you, sir. I will get back into the queue.
Okay.
Thank you. The next question is from the line of Abdul from Anand Rathi. Please go ahead.
Yeah, great. Thank you for the opportunity. So just two questions. Firstly, on the product mix side. So, as I heard in your opening remarks, the export to sales had been quite lower in this quarter. So, how should that pan for the entire year? Is there any sort of a demand contraction which is happening from overseas client, or this was just a temporary phenomena from a quarter basis, wherein the priority was given to domestic customers?
So one thing I would like to say that going forward, the export demand is looking strong. We have a lot of pending orders also. So it was more of one-off case because of more priority being given to a domestic market. But we have a lot of big pending order list for exports. So it's not that of worry for us. Export demand.
Okay, sure, sir. And second, so I refer to the presentation where you mentioned that the investment what you're doing in 2MNI backward integration, that number is slightly lower as compared to what we are doing previously. So any color on that front, and whether this 600 crore CapEx guidance for 2-3 years, is that entirely intact?
Yes. So the only thing is, in some cases, because of improved process, you can say, we might be able to reduce the capex number in absolute sense, But that doesn't impact anything related to the capacities we are planning to install. That plan is still on.
Understood, sir. Okay. Thank you.
Thank you. The next question is from the line of Ranbir Singh from Sunidhi Securities. Please go ahead.
Yeah, thanks for taking my question. Sir, in this quarter, do you had contribution from metformin facility, new metformin facility phase 1?
No. So that facility is not yet constructed. The what we are talking about from 1,000 to 2,000 tons per month, that is still not yet commissioned.
So when actually will see revenue coming from this facility?
So it will take around because of this COVID thing, conservatively, safely you can say 10 to 12 months more.
Okay. So all these new projects start, earlier we anticipated that at least by second half of FY22, the phase 1 will start contributing. So I think this is pushing towards FY23.
Correct. Slightly there is a delay because of this construction activities getting delayed.
Okay. And earlier participant asked about that gross margin outlook. So you said 4 percentage point in improvement may happen in next couple of quarters. That's what you say?
Correct. Next couple. Correct.
So from 31, it can go to 35. That is the max we can see in this financial year.
For this, correct. For this kind of product mix, that is what we are estimating. It's around 18-19% EBITDA levels.
So even that 38% kind of gross margin aspiration we had, so that seems not achievable in this financial year, right?
In this financial year, no.
And this price increase, the passing on price increases you talked about. So what is actually what proportion of our contract is based on long term, where we can have the price increase cannot be passed on in a smaller time, and how much is the business where we can pass on, so that will give some understanding going forward, that because price is likely to remain volatile for most of raw materials. So can you give some light on it?
Yeah, typically what happens, our exports contract, the prices are fixed for 2.5 to 3 months on an average. So we already carry fixed orders for almost around. Yes. Hello. You can hear me, right?
Yeah.
Okay. Yeah. So the export orders are usually 2.5 to 3 months. So that is there. So there we cannot do much. Then our domestic orders would be somewhere around 1 month. But then for few of the MNCs, we are fixing up price contracts also in domestic market for a quarter, for 3 months period, and then we revise it. So in some cases it is difficult to revise immediately. And as I was saying that especially the acute therapies like antibiotic and antiprotozoal, because of these lockdowns, at one side there was increase in raw material prices, sudden increase in raw material prices, and severe hikes are there. So it is very difficult, to justify to the customers, especially in this market, to get very severe hikes in our selling prices. So it's like a little slow process, but it is happening. So it is more of temporary gross margin contraction right now.
Okay, fine. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Bob from Falcon. Please go ahead.
Hi, I have a couple of questions regarding your products. You're a leader in fluoroquinolones, but there's been quite a bit of backlash against that because of the side effects. So I'd like to understand your comments regarding this. And similarly for nimesulide, again, there have been some negative articles around the side effects on liver, etc. So how do you see the demand panning out for such products?
Yeah. So as you said that company as a whole, we have, for new greenfield capex, we are focusing more on chronic lifestyle diseases and less of acute therapies. So that is the way of, de-risking ourselves from such kind of things happening in future. But as of now, what we see, so we have 5 fluoroquinolones, Cipro, Enro, Norlevo, and Ofloxacin. So they treat different kind of acute, you can say, symptoms. So we haven't seen much of a problem. But right now, what has happened that because of lockdown, this particular infection are spread. Some of them are respiratory, some of them are spread through waterborne, amoebic infection or bacterial infection through water. And because people are not going out, not meeting other people, not eating out, and because of all these things, the demand has been slightly low. Not mainly because of the side effects, because these molecules are quite stable as of now. And since they are used, in very short bursts, what I'm trying to say is, it's not like we have to consume lot of doses of these particular molecules. So that is some form of insulation in terms of for the demand of these products. And as far as nimesulide is concerned, so long back, in fact, if I'm not mistaken, more than 5 years back, nimesulide is, though it is very effective molecule, but it is banned in pediatric use. But that thing happened long back. But even after that ban, for adult purpose, it is being prescribed quite heavily. So we are not seeing that much of a problem as far as means demand of nimesulide is concerned. And in fact, nimesulide has done quite well in last financial year for us.
Right. So you're not saying year-on-year a contraction in growth. You're actually seeing the demand increase year-on-year for these molecules, ciprofloxacin, nimesulide, and all that.
Yes, very much, yes.
Okay. And the other question I had was, you have a large scale and you've been one of the leaders in metronidazole and tinidazole, etc., because you have been producing these molecules for a long time, for the past 15, 20 years. I understand that. But how, when you're venturing into these new APIs, how do you establish leadership? Because you wouldn't have scale in the beginning and there would already be established players. So how do you compete on price with them?
Right. That's a good question. The thing is, when we launch a particular molecule, we see through it that what is the competitive landscape of a particular product. So most often, when we entered, there were like 6-7 players in that particular molecule, which in turn also means that the market share is quite fragmented. So there is no clear-cut dominant player in the market. Obviously, there will be top 2, top 3 players, but there is no clear-cut dominance as such. So if the market is fragmented like that, it is easier for new player to enter. And then obviously because of what you can say process R&D, the way we improve the processes, our engineering skills are also very good, especially when it comes to handling products where a lot of material movement needs to be handled. A lot of material movement is there. So whatever we manufacture, they are manufacturing
Hello.
So that is how we try to become cost leader. Then obviously backward integration is always there, always one of the key, you can say, factors for achieving that cost of production leadership. And that is how we start getting more and more market share. So initially there are price wars. So we have seen that whenever we try to expand in a meaningful way for any particular product, there is a little bit of margin contraction, but in the longer run, the margins revert back to mean. So that is what our main strategy is.
I see. Okay. And finally, we've been hearing from a couple of players that have announced their results recently in formulations that they're seeing a lot of price erosion. So if there's price erosion in formulations, would that not feed back to APIs and lead to lower prices for you as well?
So the price erosion in terms of the final prices of the retail drugs, that we haven't seen in, at least in the developing markets as such. And moreover, the for the API content, the cost of API vis-a-vis the retail price of a particular tablet, a strip of tablet, is very, very low. So so actually the more margins are there in this distribution chain of the formulation, the wholesalers, the retailers, and all the stockists. So in fact, even if they try to save in API, it won't be meaningful for them. Most of them.
I mean more in the export markets like US and more the developed markets.
So we haven't seen any pressure as such, because ultimately the API price generally, historically, they are driven by the input prices, because if you take 3 manufacturers for any API, for all of them the input prices more or less are similar. So everyone is in the same boat. So typically, if there is any movement in the input prices, that is of the basic chemicals, then the API prices do get revised, and and accordingly the ultimate formulation prices should be getting revised finally.
Okay, understand. Thank you very much.
Thank you.
Thank you. The next question is from the line of Nimish Mehta from Research Delta Advisors. Please go ahead.
Yeah, thanks for the opportunity. First, the basic question about raw material pricing. I mean, what is the reason behind the increase in the price? I mean, I couldn't get it, in the initial comment. If you can repeat, it will be helpful.
Yes. Harit bhai, would you like to answer this question?
I didn't get the question. Can you repeat?
He's asking the main reasons for the raw material price hikes.
Yeah, one is there are a couple of plants which were taken a shutdown, and there are some one or two plants in US had accidents. They had some issue on the power and the situation. So that has caused delay, and they are not able to operate for first quarter almost. So 3 to 4 months their plants were shut down. So that is one of the reasons. And overall, the crude prices also has gone up from say $50 to $75 a barrel. And overall demand supply mismatch was there. So all put together, this has created a very big price increase in major raw materials. Yeah.
So this plant that got shut down you're mentioning is in which country? In China or in US?
China.
And is it for all the products? Because we have been seeing pricing.
In part of the product, yeah. Some of the products, yeah. So out of 20, 5 or 6 products were affected because of that. And there was supply mismatch also, supply-demand mismatch. Due to sudden demand spurt, the prices went up also.
Okay. The other thing, following up on the last question as well, like I'm trying to understand how do we select products, and in the presentation you mentioned that every API company should have some niche. So what is the niche that we are talking about, in technical sense, and how can this niche help us expand, or how much can it help us expand beyond where we are currently in terms of number of products, let's say?
So the main niche for us, as far as the API segment is concerned, is the cost of production. So that is the main thing, and the cost of production comes from multiple things actually. Manufacturing efficiency, of course, that is important. Process is important. That is the ROS. So R&D is important. Engineering skill sets are important. Then the quantum means once your cost of production is less, then you should expand very quickly to scale up your operations, because once you scale up, the overheads also go down per kg. So that also helps in bringing the cost of production further down. And apart from price, being a price leader in APIs recently, in last 5-6 years, the quality of API, the impurity profile, the regulatory requirements, that has also become very stringent. And because we are there in this business since last 36 years, and all our customers are repeat customers. So there is a good brand name of Aarti in formulation space. So and that also helps us in getting more market share from our exit. And our customer base is also very high. So whenever we launch a new product, we get that much easier access to those purchase managers, because many of the formulation companies have a basket of products. So if they're buying a certain set of APIs from us, then obviously they will give us preference for the newer launches also. So that is one. Then for expansion, we are saying that the thing is we have big list of products. So top 13, 14 we have already established leadership, whereas in some cases the leadership is very means you can say we are much larger than the second next best player, you can say. So that kind of leadership we want to achieve for almost all the products, because so we will capture more and more market share for older molecules, because then it will give further stability to our margins for those products. And meanwhile, we have a big trail of molecules, like 15th to 40th API which we manufacture, and they are contributing very less. The top 20 molecules must be covering almost 94-95% of the standalone sales for the API and the spec chem segment. So all these trailing molecules, like next 20 molecules, they are contributing only 5%. So those are the molecules which will grow in future. And then by doing R&D, we'll keep on adding new molecules also. So that is the way we are, trying to explain.
Yeah. Okay. So are there any processes or technology where we have developed any expertise, which is what is?
Yes. So what you say is correct. So when you manufacture say a certain set of products, now we manufacture wide range of products like antibiotics, also fluoroquinolones. Then we manufacture antidiarrheals in a big way. Then anti-inflammatory also we are manufacturing in a big way. Then cardioprotectant, antifungal, anti-diabetic also. So what I'm trying to indicate is that a lot of the chemistry, not all the reactions, but a lot of chemical reactions we are very well versed with, and that too at a very large scale. So we are manufacturing all these products which I talked about in a very large scale. Means very, very large scale. Even the few of the smaller, when I say smaller products, I still mean 25-30 tons per month of capacity. So that level of production I'm talking about. So obviously we get you can say expertise in keeping the cost low for these reactions, and that is what we use when selecting a new molecule. We also see that the chemistry involved in manufacturing that new molecule is somewhat similar to what we are already doing, because that helps us a lot, in launching a product with low cost.
Understood. So what would be common, let's say, among the top products in terms of chemistry or process or technology? However, when some sort of processes would be common among the top, 5-7 products? I'm just trying to understand, like, what is common across all these various products?
So there are different synergies. Like, for example, a particular we manufacture one particular intermediate which goes in 2 products, then one particular intermediate which goes in 3 or 4 products. So when you have such kind of ecosystem, then you can manufacture that intermediate to a large scale and then be a cost leader. So those kind of efficiencies we do look after, search for.
Oh, so okay. So focus on intermediate would be.
Sorry to interrupt,
Yeah.
sir. This is the conference operator. Would request you to rejoin the queue.
Okay.
We'll speak again.
The next question is from the line of Ranjan Jain from Nirmal Bang. Please go ahead.
Yeah, thank you for the opportunity. So just one question I have. You were saying that there was sudden price increase what we have seen. Is it possible for you to quantify what kind of overall price increases what we have seen in the raw material, and against that what price increases what we have taken, which probably would be reflected in coming quarters? Thank you.
It is in a way slightly difficult that how much will come back, because there are cyclical events also. But what I will give a very rough idea that when I compared gross margins of few of the products from December quarter versus June quarter, then we almost could see more than 30 crores of difference purely in terms of gross contribution for this quarter.
Okay, so that is the kind of price increases you have seen. And the benefit of any price increases what you have already taken is not reflected in this quarter at all.
To some extent, it has been reflected to some extent, but not completely.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Rajdeep Singh from ASK Investment Managers. Please go ahead.
Hello. Hi, Adesh. Am I audible?
Yes.
I just wanted to understand your opening comments better. You said the demand for acute products was lower in the second wave of COVID.
Sorry to interrupt, Mr. Singh, but your voice is breaking, sir.
Just one. Is it better now?
Yeah.
Yes, sir.
Adesh, just wanted to understand your opening comments a little better. You said the demand for acute products was subdued in the second wave, where this is a little contrary to what the IPM is reporting and the companies which more acute focused reporting supernormal growth. So where is the disconnect? Just wanted to understand this.
Yeah. The thing is, it might be related to particular products, or a particular company getting market share from some other company or something like that. But the kind of molecules which we manufacture, that many of them go, for therapies like bacterial infection, respiratory bacterial infection, or your UTI, urinary tract infection, stomach upsets because of waterborne diseases. And because of that, I think these particular products might be affected. So it's see the thing is, one of the antibiotics has, though I won't name because we don't disclose product wise, but then
Right.
I will tell you, one of the antibiotic products has done phenomenally well. Means the sales has been doubled as compared to last year, but then the rest four were subdued. So it was more of a holistic statement done for applicable for all the products.
Okay. Product specific has picked up, and given the onset of monsoon also, the demand should remain strong, you're saying, for your kind of products.
Yes. So usually this Q4, Q1, and Q2 are the stronger quarters for us.
Right. And one last question from my side. Sir, our new capacity would come on stream by FY23 end. So prior to that, for this financial year and for next financial year, FY22 and FY23, can we grow at 15% on the top line? Would that be comfortable, or that is a little stretched?
So the thing is, we are targeting that much growth. So right now we did had 13% volume growth. We will still target for that 10 to 15% growth and
value growth.
Yeah.
Okay. And gross margin, you said 35 to 36%, and margins at operating level in the range of 18-19%. Is that correct?
Correct. Sure.
Okay. Thank you. That's all from my side. Thank you very much.
Thank you. The next question is from the line of Abdul from Anand Rathi. Please go ahead.
Yeah, hi. Thanks for the follow-up. So would it be possible to quantify the impact of the zero discharge cost which is there in other expenses, as well as the cost pertaining to the share buyback?
See, approximately crore of OPEX might have gone up per quarter for that, and buyback would be also to the tune of similar expense, 50 to 75, something like that.
50 to 75?
Right.
Sorry, Okay. And secondly, on the US side, any update from the FDA would we have, or any partnerships which we are having in the US for APIs you'd like to highlight?
Yeah, FDA. So the thing is, FDA, we have been receiving few communications from them, but because of this, we were planning for a mock audit from ex-USFD inspector back in April, May only, but because of this shutdown in travel from US, they were not able to travel. So we are planning for this now August or early September. We have already identified, and everything is finalized. Just the travel arrangements have to be made, and the report of that would be submitted to the FDA directly, and then that might lead to either a virtual audit, or I don't know how the FDA will proceed further. But because this will be ex-USFDA inspector, and that too from US itself, it will carry a lot of weightage, that report.
Sure, sir. So maybe that would happen sometime in the second half of the fiscal. Is that understanding right?
Yeah, by the next quarter, I think we should be coming up with at least some update on the report.
All right. Understood. Thank you.
Yeah, thank you.
Thank you. We would like to remind participants that you may press *1 to ask a question. The next question is from the line of Ramakrishna, an individual investor. Please go ahead. Mr. Ramakrishna, your line is unmuted. Please go ahead with your question.
Can you hear me now?
Yes.
Hello?
Yes, we can.
Hey, Adish. This is Ram here. So, Adish, we have, I believe that you got the approval for PLI scheme from Government of India, right? When do you think you will start taking the benefit of this scheme? That's the first thing. And second question I would like to ask you about, do you have any blueprint being a shareholder? We have a lot of expectations from you guys, okay?
Okay.
So do you have any sort of blueprint so that you can be a market leader, in next few years? If you have, what is the timeline? I would like to ask you.
Yeah. So the thing is, become market leader in any product. It takes time, and it also depends upon the product to product, because some products are more export oriented, some are more domestic oriented, some are like import substitutes. So in products like import substitutes and more domestic oriented products, it is fairly faster. If everything goes right, then 3 to 4 years you can become a market leader for a particular product. But for export oriented product, maybe you can, couple of years more, because approvals and everything takes time for that. And in exports also, it depends whether it is going more in ROW markets or, regulated market, either the European market or US market. That also decides how much time it will take to achieve leadership in a particular product. And as far as the first question was concerned, the PLI, the first year of benefit ideally should be FY20.
There's a disturbance coming from your line, Mr. Krishna. Mr. Krishna, there's a lot of disturbance coming from your line. Request you to rejoin the conference, sir. Mr. Krishna? The line for the current participant is disconnected. The next question is from the line of Ranveer Singh from Sunidhi Securities. Please go ahead.
Hello.
Yes.
Yeah. Thanks for follow-up. In this quarter, you had additional overhead expenses related to liquid discharge thing. So what was the amount? How much we have spent additional?
Yeah, approximately 1 crore for a quarter. But that too, going forward, we are having a lot of ideas in terms of using it for wastage recovery, for the utility purpose, and deriving more byproducts from it, which can add some amount of revenue stream to the waste water. So in longer run, we will reduce those costs, but approximately it was increased by, you can say, 1 crore per quarter.
So still 1 crore 1 quarter would be an incremental spend on related to this?
Yes.
Okay. So just I was calculating, like currently we have 884 crore kind of overhead expenses in this quarter. And even if we maintain, if that run rate is, maintained going forward, and we assume that 34% gross margin happens every quarter after this, so from second, third, and fourth quarter, then still your EBITDA margin will not be 18%, so we will still be 17% kind of thing.
So usually what happens, one is once we start selling more, immediately the operating leverage will kick in terms of the fixed expenses. So 3%, 3 to 4% your increase in the gross contribution and a bit higher sales will definitely take it to 18-19%, 3-4% gross margin.
Okay, so chances are on gross margin front we can see even better than what we are anticipating, and then
yes. So the thing is, definitely there is a scope of improvement in gross margins.
Okay. That clarifies. Yeah. Thank you.
Thank you. The next question is from the line of Umang Shah from Asian Market Securities. Please go ahead.
Hi, sir. Thank you for taking my question. Sir, are you observing any capacity increase in top 10 molecules from your competitors in India?
For metformin, people have increased capacities.
Right.
Would you like to answer this question? For top 10 molecules, whether any competitor has recently increased any capacities?
No, except metformin, I think no. Yeah, no. Yeah.
Right, sir. And sir, would you say that you've reached a stage in your antibiotics that it would be detrimental for any of your competitors to put any additional capacity simply due to scale?
Yeah. It looks like, yeah. Because nobody, we already reached at the very high scale, so to enter any new entrant, it would be very difficult. Yeah.
Right, sir. Thank you, sir. And just sir, one more question. Sir, currently Aarti Drugs has highest margins in last 20 years. So, sir, would you be able to roughly attribute what percentage of these margins are structural and what percentage would be cyclical?
It is difficult to say because, last year, initial part of the year, the margins were exceptionally high. But after that, from December quarter onwards, they were, fairly, you can say structural, not much of cyclical. The thing is, apart from this sudden price hike, there was no reason, and there was no downfall in selling prices of the products or anything like that. So whatever was there was structural as such.
Absolutely, sir. Sir, that would be all. Thank you so much.
Thank you.
Thank you. The next question is from the line of Cinderella Thomas Carvalho from Centrum Broking. Please go ahead.
Hello, Cinderella.
Hi. Thanks for taking my question. Just 2-3 clarifications. Adesh, can you please help us with how is the status on the recently expanded gliptins and clopidogrel? I mean, if you could update us how these products are doing.
So, gliptins, we just launched one of the products, gliptin. Then clopidogrel, that product is going strong as far as the sales are concerned. The product is doing good, and we believe that going forward, this clopidogrel should be a blockbuster molecule for us.
Okay, and if you could help us understand how do you see the ramp up of gliptins over coming 2 to 3 years time?
So the thing is, we are coming up with a multi-purpose facility first of all. So it will be more, it can add up 70 to 90 crores of revenue. But then the major thing would be the next level of expansion. Once this product grows, after going off patent, it has gone off patent. So now the product will start growing. At that point of time, we will require a second phase of expansion, more like a dedicated facility for this product line.
That's helpful. And if you could speak something more on the specialty chemical expansion that we've been talking about, largely on the chlorosulfonation side, and what is the status? How is the capex coming up?
Yes, so the two greenfield sites, in fact 3 I would say that way. One is in Tarapur, other 2 are in GIDC. We recently acquired the third one in last quarter itself. And that's the biggest land parcel we acquired till now. And another one is also very big. And there the plot development is almost over. Now this foundation, all this work will start for our backward integration project and intermediate plant project. And then specialty chemicals, the greenfield project plot development will start maybe in few months, but what we are doing is we are going ahead with a brownfield expansion for spec chem. in one of our current intermediate facilities in Tarapur itself. So there itself we'll come up with a big capacity, almost more than 450 tons per month kind of a capacity for specialty chemicals. And that we are doing mainly from the point of view of entering the market early.
So, what kind of expansion in terms of overall share from specialty chemicals we can envisage over 2 to 3 years?
So, this current facility, maybe 2 or 3% it will go up because the other categories also growing. But once that greenfield project comes up, and the utilization of that capacity goes up, then it should become little meaningful, So it can go to, around 15% or so.
Great, Adesh. Thank you so much. This is very helpful. Thanks a lot.
Thank you. The next question is from the line of Rajesh Srivastava from InCred Asset Management Company. Please go ahead.
Yeah, hi. Thanks for taking my question. So just to clarify, you said 15% top growth on the APIs or overall top line?
Overall top line.
And if I have to talk about only the APIs, then how do you see the growth going forward for next 2 to 3 years?
Thing is, it is similar. In fact, formulation will also grow maybe even at a faster pace because of the base effect. But then, if you take the average, then more or less it will be similar. Because API is right now, API segment, as in the API plus Spec-Chem, is right now around 85% of the Concall business.
Got it.
That's
if I were to break it into...
Yeah, sorry.
If I have to break this 15% growth into price hikes and volume growth, I'm sorry, might just be a repetition, but I missed the opening remarks.
Okay. The thing is, more or less, what we are seeing, we are assuming volume growth only, frankly speaking, because price growth we cannot estimate. So usually we try to avoid, including price growth in. But even if you want to take, it will be very minimal. That is what we will be.
So we are expecting around 14-15% of volume growth, basically.
Yes.
And sir, on the formulations, what percentage of the capacity is currently utilized? Like I think we're doing 350 crores, roughly 350 crores of sales, right?
Yes. So
Yeah, please. That is, you can tell. Yeah. We are right now operating at 80% of the capacity.
And incremental metformin capacity is coming in the formulation, right?
No, right now, it's an API.
Okay. So any incremental capex on formulation?
Yes, sir. In formulation, we are expanding in oncology product with product expansion and product development. We have a budget of 55 crore.
And this will commercialize when?
It's from the scratch stage. It's a greenfield project, so it's will be. We are talking about 2 years time.
Okay, so basically for next 2 to 3 years, growth is going to be almost flattish for formulation because we are already nearing peak capacity, right?
Growth will come from the existing product which we have registered in different part of the world. About 250 products has been registered. So the growth will come from there also. So we will be growing at a rate of about 15 to 20% meanwhile.
I would like to add here that our formulation model is slightly different. So it is not like you can say asset specific. It is more about IP specific. Means we have IP, intellectual property, and we can get it manufactured outside also. And
outside also.
So it is not restricted by capacity.
Okay, got it. So last question, like what is the capital employed over here? Like 10% of total capital employed? at the moment?
Not more than 40 crores, I believe.
Okay. Okay. Thanks. Thanks. That's it from my side.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to Mr. Adish Patil for closing comments.
Yeah. So thank you everyone for participating in the call. Always enjoy answering your questions. So one of the key concerns going forward is that many scientists have predicted a possibility of third wave of COVID-19. We sincerely hope that this wave to be a mild wave, or in the best case doesn't arrive at all. Let the vaccination happen very quickly for most of the population. We would also like to assure you that employee safety and hygiene remains company's priority in these periods, and companies remain fully geared up to face any disruption going forward. In fact, in second wave also, we were able to manage our production to the full extent by taking care of all the social distancing and fumigation, etc., transportation of employees. And thank you everyone for joining us on this call. Please reach out to us either directly or through our IR consultant, that is Strategic Growth Advisors, should you have any further queries. Stay safe, and now we can close the call. Thank you.
Thank you. On behalf of Aarti Drugs Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.